Free and clear of the chatter from Wall Street, you're listening to Talking Stocks Over Beer, hosted by hedge fund veteran and newsletter writer Mike Alkin, who helps ordinary investors level the playing field against the pros by bringing you market insights and interviews with corporate executives and institutional investors. Mike sifts through all the noise of mainstream financial media and Wall Street to help you focus on what really matters in the markets. And now, here's your host, Mike Alkin.
Welcome. It is Monday, April 8th, 2019. Hope you had a good weekend. Here in the New York area, beautiful weather. Starting to feel that it's starting to feel like it's springtime. Although I will say it's been a kind of a mild winter. While the polar vortex was blasting the Midwest and people were getting hammered in the cold. A friend of mine, Brent in Minneapolis, was sending me his weather app showing me when it was minus 50 below, a few months ago. We didn't get anywhere near that here in this area in the Northeast, but I don't think I took my snowblower out one time this season. I mean, we had 4, 5, 6 inches, just some minor stuff. So, for that, I'll get out and, use the snow shovel. But so it's pretty mild, really nice weather over the weekend, and I'm starting to get in the when do I put the summer furniture out phase, because we have a lot of stuff in our backyard, and I put everything away, and it starts to stack up, and over the years, you start to accumulate, and I've got a ton of sports equipment in the garage, so space gets a little bit tight, and I'm always anxious to get it out. My wife's always saying, wait, you never know, April can be weird. And I'm like, who cares? She said, well, if it snows, you don't want the outdoor furniture to get ruined. And I think, well, in the summertime when it rains, it's fine. Who cares, right? It's water. But she has a different view of snow, so I'm not going to go there. And after 25 years, you realize happy wife, happy life. So you just say, okay, we'll go with that. And so I keep it there. But what happens over the winter is my son and his caveman friends, my son being a caveman included, they are always finding their way into the garage. And no matter how much I organize it, no matter how much I try and keep it structured, it's just a calamity at the end of every weekend. Now they're 13, and it was worse when they were 10, but still, I mean, they pull everything out. I try and get him to put it away. I go outside when they're all outside. I'm like, listen, guys, you got to keep this somewhat organized. Yeah, Mr. Alkin, you got it. Or now, yeah, Big Mike or Uncle Mike. They'll call me anything. He's got some real characters as friends. But anyway, so that was this weekend. I was trying to get the pre-clearing out of the garage organization. And you know how you know yourself and you know your hot buttons? Well, even after all these years of doing this, I still know the reaction that doing this is going to elicit. But I can't help myself because I'm in there and I say, okay, I open it up and I'm like, oh my God, how did this just happen? I just organized it. And I go in, and as I start moving things around and start to put stuff away, invariably I trip on something and I'll hit my head on something, and I start ranting and raving, and it just goes on, and it just keeps going. So that was kind of this weekend. And as I'm doing that, we have a big golden retriever, Annie Mae, we call her, and she is 7 now. And, we take her out, we do her walks every once in a while for whatever reason. If we're just tied up, we can't get her out, we'll put her back out and she'll go to the back of the property and she might poop and it's in the back under the bushes or whatever. And then we will, go out, and clean it up. And I keep on the side of the garage a little metal trash can with a bag in it, and we take the poop, put it in a bag, put it in there, and then just throw it out. And so we, my son, when his buddies are over, will say, "Hey, listen, just go out and clean up in case there was that week we didn't get a chance to walk her, and she was out there for a couple of poops out there and over." So I tell him, just take the little tool and put it in a bag, and well, I went just to go. I figured I haven't checked on it in a while, and sure enough, I open it up, and my son doesn't use anything. It turns out he doesn't put it in the bag. He just throws it in a trash can. And I can't even begin to tell you how bothered I was. So that turned out to be a couple-hour project for me to organize, structure the garage, and then deal with that mess. So that was part of the weekend, and then the usual shuffling around of the kids going here, there, and everywhere. And which I love, right? Because how long are we going to get to do that? Where it's a Saturday night. Take my daughter and her friends. They go somewhere for dinner. I pick them up, and then I'll go get my son. I'll drop him and his buddies off somewhere. Like I said, I think I complained a few weeks ago, maybe a little bit longer, that it would be nice occasionally if someone else's parents would do it, and some do, but a lot don't. But I love the fact that I know my kids can call anytime, and they know I'll be there, or my wife will be there in 2 seconds, and we were happy to do it. So that was nice. And then, but we had I don't know how many fans there are of Seinfeld listening, but Seinfeld to me is an institution, as it is to many people. And I don't know if it's a New York humor. I think when it was on in the 90s, it took a little while, I think, for it to find its groove, because it really is very New York centric. And I know when I lived in Dallas for a while, in the early 2000s, people would be like, "What?" And like, that's bizarre. And then, it started just to gain in popularity, but it really is New York centric. And a lot of it can be obnoxious humor. But one of the characters, obviously, is George Costanza. Just always doing the wrong thing, saying the wrong thing, but just lovably funny, obnoxious, stupid guy. Lovably, I shouldn't say, but just in a oddly endearing character. One of the scenes is a scene where George and Elaine and Jerry are going somewhere, and they're picking up salads on the way to bring, and they walk into the store and they order all the salads. They order big salads, and George pays for the salads. And so he buys it all. And as they leave and they go to wherever they're going, and Elaine says, "Oh, I'll take it." So Elaine walks into this gathering with all the big salads, and everyone is saying, "Oh, thank you, Elaine. It's so nice. We love it. That's so nice." And Elaine doesn't say, "Well, George bought the salads." So I think the title of that episode was "The Big Salad." So the next day comes, and George is it's bothering him. It's sitting in his gall. It's really in his craw. And the next day he said, "I can't believe, Elaine, that you took credit for the big salad. I paid for it, but no, you take credit for the big salad." So as years go on, whenever there's a big salad moment in someone's life, and that's the thing about Seinfeld, every episode you say, "Oh my God, that happened to me." And I think that was the show about nothing that had this comedic genius. Well, we've had a few episodes. Well, my daughter had some girlfriends over, and they were watching a movie, and my daughter said, "Hey, Dad, would you?" And they were in a different part of the house, so she texted me, which drives me nuts, by the way. My kids have a penchant for texting or calling from inside the house, and it's a pet peeve of mine. If you're in the house, either get up, don't yell, just get up, walk, and say what you need. But my daughter texted me. She said, "Dad, would you make us all popcorn and drinks and stuff like that?" I said, "Sure." So I make snacks, not just popcorn. I make them a bunch of snacks. I make them drinks. It probably took me 20, 25 minutes. I don't know. I'm popping 7 or 8 bags of popcorn. I'm putting all the other like snacks. And if it was my son's friends, I just throw a bunch of chips in a bowl and throw it out there. Cause like I said, they're cavemen. But for the girls, I tried to make it nice and organized. I made a couple of trays that I was putting it on. So my wife was puttering around the house or doing whatever. And so here I am. I have both trays ready to go and with all the snacks, and they're all nice. And my wife comes in. She was puttering around the house, and she comes in. She said, "Oh, well, what are you doing?" I said, "Oh, I made the girls a snack." She goes, "Oh, I haven't seen it." She was busy on a project. She said, "Oh, I'll bring it to them." And I said, so she starts to take the tray. She said, "I'll bring them, but don't worry about it." And I said, "What are you doing?" She said, "What do you mean?" I said, "That's the big salad." She said, what are you talking about?" I said, "I just spent 25 minutes making this and putting everything together, and it's all nice and girly, and you're taking in the big salad." Well, we had such a laugh because she said, "You know what? You're right. It's the big salad." So it was really it was a big salad moment. So that's Saturday. Yesterday, my daughter decides that she wants pesto sauce and pasta and some chicken, and she could cut it into it and everything. And so, okay. And again, my wife she's getting her second master's degree. She's a CPA and she has a master's degree, and she's getting another one because why not? And that was somebody's got to be smart in the family, so it's her. So she was busy just writing something, and the program's almost over. She's done in a few weeks. But so I ran to the grocery store. I bought all the stuff. I come back and I was making the chicken my daughter likes, like chicken cutlets, and but making the pesto sauce, you got to get the processor out, and you got to do all that stuff. It's easy, but it's a little messy. And then making the salad and then the chicken cutlets and put them in. It takes a little while. So I've got the kitchen going. I've got I've got everything down, and yeah. So probably I don't know. That takes me 45 minutes to an hour. And then I set the table. Sunday dinner. We always sit down. What's the plans for the week? We talk about what's going on, because the week gets hectic sometimes. And while we have dinner most nights together, if my son's got a game or practice, or my daughter's got something, sometimes it's ship sailing by the night. But we do that, and one of her best friend comes over, and she says, "Big Mike, I heard you made pesto sauce." I said, "Yeah." So she comes over, and she was eating dinner at her house, but she wanted to come and just try it beforehand. She liked it, got the seal of approval. But my daughter wasn't home at the time. So again, here it comes. And my wife didn't mean it at all, but she had. So here I am. Everything is getting ready in the for dinner, and everyone's starting to descend upon the kitchen. But before they did, here comes my wife into the kitchen, and she's just puttering for the last couple of seconds. And here she comes, and my daughter comes in, and she's so excited. And she said, "Oh God, look, it looks so great. Mom, and referencing that mom was doing a lot of it." And so my wife looked at me, and she's like, "The big salad?" I said, "The big salad." So if you have big salad moments, just stop and reflect. Watch the Seinfeld episode for laughs, and you'll get a kick out of it. So anyway, Islanders start the playoffs Wednesday night, 7:30 p.m. Eastern. I don't know what you're doing, but I can't think of anything more important that you could be doing than sitting down in front of a TV watching the Islanders play the Penguins. And I have, my NHL.com pass, so I'll be watching that and then going back and forth. I mean, the next 2 months are just out of control. All right, NHL playoffs. There is no sporting event like this. These kids play hard every day for 82 games. They then take it to a level There is nothing like playoff hockey. The level of intensity, the speed, the hitting, it's out of control, exciting. Now, so obviously I'm an Islanders fan. They're playing the Penguins. It's going to be a tough grind. I don't expect them to get past Pittsburgh only because of the experience the Penguins have. The Islanders are a chip and chase type of team. What I mean by that is they don't have any real superstars. They don't have great offensive talent, but they play great defensive hockey. They're grinders. They're hard workers. But the Penguins still have Sid and Yevgeny Malkin and Phil Kessel and Chris Letang, and these guys are just tremendous. And I'm missing a couple, but they're just outstanding. And but it's going to be a great series. But then, all right, 7:30 games end at 9:30, 10 o'clock, and then you got the West Coast game starting. I mean, it just doesn't get better than that. And I don't know what it is about watching games in the NHL. Like, I know every arena, and I know which one has great lighting, which one has great camera angles. And there's a few where you're just thinking, oh God, the camera angle sucks. It's a little dark. I don't like it. But for some reason, when you're watching games from Calgary and Winnipeg, it's just fantastic, and you feel like you're on top of it. So it's like, my God. So that's the next couple of at least 6 weeks or so. But so I'm excited for that. That starts. Baseball season just started. I won't even talk about it. Last year I was here gloating about the 11-0 New York Mets, and then went on to lose 28 of their next 35 games. Well, that was probably generous. They probably lost 30 of the next 35 or something like that. But they got off to a decent start. But forget it. We're in playoff hockey mode right now. So anyway, that's that. If you're not a hockey fan, just give it a shot. So I got a text, not a text. What's it called? A direct message on Twitter from someone. And it says, a huge fan of your podcast. It's giving me a new perspective, yada, yada, yada. Says, I've been listening to your podcast for a couple of months now, and I found you on YouTube about uranium and so on and so forth. It says, you have a propensity to tell it like it is. I was hoping that you could do a podcast on the formation of your worldview and blah, blah, blah. And then it goes on. I don't mean blah, blah, blah dismissingly. I'm just not going to read you the whole thing. But really, it says, you often state we need to put in the work, something which I pride myself on, yet without the correct tools and references, we may be doing the wrong work. What authors and titles should we be utilizing in order to understand financial statements, enabling us to do those deep dives you talk so much about? It was a good question. And it goes on, and it was a nice direct message. I get asked a lot, what do you? And I say that a lot. You have to do your own work. And look, I understand most of you listening are not financial analysts. But you are listening to a financial podcast, so you clearly have an interest. Because, like I said, my wife and kids in the car, if I were listening, the eyes roll over. But seriously, and a lot of my friends, my peers that are not in this business have no interest. So I applaud everyone who's listening and trying to learn. I wish there was. That I could sit there and say, okay, let me share with you over 20 years of everyday's lessons that I learned, but that's not practical. I'm maybe one day when I'm I'm already gray, but one day when I'm old, I'm almost old, but one day I'll teach somewhere. But in the interim, it is just, time limitations. And so I can't sit there and say, okay, here's how every such scenario should be, and here's how you analyze an income statement, a balance sheet, a cash flow statement. but I could point you in the right direction. And I think so much of this business, so much of investing is art and science. And I don't come from a pedigreed background. I graduated college when I was older. I wasn't a great student in high school. I was a 3-sport athlete with no familial direction, and just kind of got by in high school, and then went to college and didn't do well the first time, and then I went back later on when I was in my early and mid 20s. So for me, it was a very circuitous path. In high school, and I did really well in the classes that I liked, and if it bored me, I had no interest and I didn't do well. One of the things, and I didn't know it at the time where it would lead me, but I'm very good with numbers in my head, and I'm good with pattern recognition. So I could see trends, I could see patterns, and I could do basic math really quickly in my head. Now, that doesn't mean anything, but it helps for doing this. I say in my head, right, when I build a model, it's on a spreadsheet, but I can hear things and see things and read things and quickly surmise, price, volume, what does that mean to the margin, fixed. It just works for me. And but that being said, when I came into the business, I had no pedigree, and I was in a world of pedigree, and so I worked hard to get into it. And but once I was there, I was against guys who really were the creme de la creme from top business schools, and that's intimidating for a while. And it took me in my first year, it's a whirlwind. The first 18 months, maybe even the first 2 years, you're just grinding and trying to do your analysis and hope you're not wrong. And the investment world doesn't come together for you. It doesn't piece together. Looking at, you have a little snippet of the world at your assignment. Look at these companies and analyze the cash flow statement, income statement, balance sheet, go do primary work, go talk to customers, go talk to suppliers, go talk to former employees, go out in the field and observe, right? So, but it does that. There's all this mosaic and these snippets of information you're gathering. But for me, when I was first doing it, it didn't tell me any. I mean, it told me about those specific pieces, but I didn't know how to put that together into an investment thesis yet. And then as time goes on, you observe your portfolio managers, you observe the guys who are more experienced than you, and you go to conferences and you sit around and listen to people, and you learn about what's important and what's not important. And the best examples are when you make mistakes, and you start to develop a checklist, and you start to develop things to look out for in a memory bank, and it just goes on and on and on. And then over time, it starts to piece together, and you could reference points in time. I can tell you where I was and what I was doing on certain things in life, right? When the Challenger crashed and 9/11, the birth of my children. And then after that, or when the Islanders won the Cups in 80 to 83, a long time ago, right? And the Mets in 86. And but then after that, for me, the world is in terms of when my memories, obviously my the memories of my children as they're growing up. But other than that, it's, oh yeah, in 03 this happened, in 06. It's always reference to a company or an industry that I was looking at, and I'm always building off of what I learned then. If I wish I knew then what I know now, that type of stuff. But you develop that over time. But I think for me early on, and I didn't realize it, one of the very best books I ever read. I had the good fortune early in my career to my second job in my career. My first job was a very small shop, and I had done very well calling a short on the for-profit education space. When I say called a short, it was a couple of years worth of a project, and I was the analyst, and the portfolio manager was the one sizing the positions, but I was doing the field work. And that worked out very well, and it caught the attention of a few notable people in the industry, and I wound up at a firm called Zweig Demena. It was run by Marty Zweig and Joe Demena, and at the time it was one of the biggest hedge funds out there, and really just it's been around. It was around since the early 80s, or I'm sorry, since I believe the late 80s, or somewhere like that, and And when I got there, it was a multi-billion-dollar fund. And it was Marty Zweig, rest in peace. He passed away a few years ago. But Marty Zweig was a high-profile guy. He was on Louis Rukeyser's Wall Street Week every week. He was a huge. He was an economist, PhD, and just a high-profile Wall Street guy. And Joe DiMenna, who ran the portfolio. Marty was the macro guy, and Joe was the stock picker. And Joe, to this day, is probably the greatest pure stock picker I've ever seen. And but Marty, when you got there, they had a few books that were required reading, and one of them that was required reading was a book called Reminiscences of a Stock Operator, written by Edwin Lafarve, and it chronicled the life of the famous Jesse Livermore in the early 1900s, late 1800s, but early 1900s, about a speculator. And he was a trader, and he would sit at trading houses around the country. A very different business back then. But it was really, I didn't know it at the time, but it was about Edwin Lafarge spent a few weeks with Jesse Livermore, who was one of the greatest speculators of the day. And it was about the lessons he had learned about doing it. And again, a very different time, but so much of it applied when I was reading the book over 20 years ago, and today it is. And the reason I thought of this was my friend Angus Reid out in Vancouver, who was on the podcast recently, former CFL, 13-year veteran, and successful speaker and businessman now in his after football life. Asked me the other day, he's like, what book should I read on investing? What would you recommend? And I was looking up at my bookshelf, and I need the hard copy. If you look at any book I have, everything is highlighted. I write in the margins. It's just the way I learn. I do download stuff to my iPad Kindle, and I never wind up getting through it. So I always wind up ordering the book too, because I wind up reading the hard copy. It's just how I learn. So I was looking up, and I hadn't looked at Reminiscences in a while, but I probably read it 3 or 4 times over the 20 years. And I said, Reminiscences of a Stock Operator. And just, it's not going to teach you financial analysis, but it's going to teach you how to think about the market. Because like I said, part of the market is science, right? And that's the analysis, which I'll get to in a minute, or more in a minute. But so much of investing is the art. And you can't have one without the other. I believe you need to blend the two. And as I'm going to go through and just read some of this. So I can't recommend this book enough. And I'll just read you some excerpts, some of the stuff I've highlighted. I'm not going to get too deep into it, but some of the things that stood out to me. And this was highlighted over 20 years ago, and it's true today. Another lesson I learned early is that there is nothing new in Wall Street. There can't be, because speculation is as old as the hills. Whatever happens in the stock market today has happened before and will happen again. And I think so much of that is because you're dealing with human behavior. You're dealing with psychology. Now, yes, there are quantitative investments. There are passive investments that have played a major role. But even the quants are layering on behavioral psychology right now. And, a lot of the industries that I like to look at, I like deeply cyclical industries. For me, deeply cyclical industries, this so applies. Speculation is as old as the hills. Whatever has happened in the stock market day to day has happened before and will happen again. Well, if you think about the boom and busts of natural resource cycles, right? You have industries that are on death's door because there's too much capacity in an industry. And the old saying, the cure for low prices is low prices. And what that means is when prices are so low, all of that, not all, but that capacity that is in excess needs to come out of the market so that there could be a pendulum swing for the prices that go higher. When there's less of something, prices will gravitate up. Supply demand, right? It's basic stuff. And if you know that, you would think that it's so basic, it's so easy to see that you wouldn't have these booms and busts. But you do. Why? Because of recency biases. When people are analyzing something, they tend to look at what recently happened and then extrapolate into the future. So if you can get your head around that, and it took me a long time early on in my career saying, wait a second, that's so obvious. I mean, how is that possible? Boom, bust. Why? If you just step back and say, okay, what about moderation? It just doesn't happen in cyclical industries. I'll talk in a little bit about one such. It happens. There are deeply cyclical industries. It just doesn't have to be natural resources, tire manufacturing, milk processing, whatever it is. Wherever there's cycles, you see this. So it's understanding, thinking about what those cycles are and learning and paying attention to what cycles are and how they've played in the past. You know, what happens in the market day to day has happened before. It's so important to understand the history of that industry that you're looking at. How does it normally behave? What has caused peaks and valleys? What has caused troughs? What has caused peaks? What was going on the last few times that happened? You need to understand that because you need to understand what to look for now and how to think about that. They say there are two sides to everything. But there's only one side to the stock market. It's not the bull side or the bear side, but it's the right side. Nobody can make big money on what someone else tells him to do. I know from experience that nobody can give me a tip or a series of tips that will make more money for me than my own judgment. You know, that's probably the hardest thing that was for me to learn. And that only comes with experience. And it depends, right? If you're a growth momentum investor, you're going with the crowd. And that's fine. People make money that way. And if they know when to get out, that's great. In my style of investing, which on the short side, I grew up in the industry as a short seller, you are by definition betting against consensus and you're a contrarian. Right? So you really need to rely on your own judgment. Now, on the long side, I'm a deep value, out of favor investor. Some call it contrarian investing. Someone commented somewhere, I don't know if it was on Twitter or something, a year ago. I wanted to drop the gloves. Maybe it was not. iPad comment saying, stop calling yourself a contrarian investor. You're a deep value, whatever it was. I was like, shut up. It's called contrarian, you idiot. If you're contrarian, you're contrarian. That's why I don't read these reviews, because I occasionally do, but or on YouTube comments, because I'd spend all my time going back at them. But nobody give a tip or series of tips that more than your own judgment. Your own judgment. It's your own work. I hate the word tips too, because people who know anything about stocks say, you got a tip? Okay, you're an idiot. You don't know what you're talking about. It's not a tip. There's no such thing as a tip. If anyone gives you a tip on a stock, run away. There are no such thing as tips. I got a stock tip. I hate that terminology. But your own work, your own analysis, if you are in an industry and you're not a professional investor and you are observing things or you're endeavoring to study an industry and you're making observations that feel natural and right to you, and you're seeing someone else is telling you something different, doesn't mean they're right. Use your own judgment on that, right? There's so much to be said for that. And again, you have to have the tools to know if you're right or not. And I'm going to try and hopefully point you in the right direction for some of this stuff here. And hopefully just if you listen to the podcast, just through osmosis, you could pick up some of the things I talk about. Okay, we're going to go on. This is one of the best. When I think I should sell, I sell. When I think stocks will go up, I buy. My adherence to that principle of speculation has saved me. I can't tell you how it came to take me so many years to learn that instead of placing piking bets on what the next few quotations were going to be, my game was to anticipate what was going to happen in a big way. If you pay any attention to any of the work I've done on uranium, you've seen me maybe a YouTube video where I've presented at a conference and I put a picture of Wayne Gretzky up there. And Wayne Gretzky's famous quote is, "I wasn't the biggest, I wasn't the fastest, I didn't have the best shot." Then he goes on to say, people said, "How did you become the great one?" And it's because everyone skates to where the puck is, and I'm skating to where the puck is going to be, right? So we all hope to be in whatever we do, the Wayne Gretzky of whatever it is, but very few of us ever achieve that. But it's a good way to think about it. And we'll use uranium as an example. When I first started thinking about the uranium investment and peeling the onion back and looking at reactors and mines and prospective mines and all the stuff that goes into trying to formulate a view, the one thing that was clear to me before it happened was there is no choice. These publicly traded uranium miners will have to cut production. And this was, I think I first spoke about it in early 17. It's not a when it's not an if, it's a when, right? It's a when. They have no choice. They will all go out of business because they're on the road to nowhere by producing. And you will not get the market back in balance if you don't do that. And so that's just anticipating. Now, when I'm anticipating that, my question I have is, I have to ask myself is, what's the risk reward of that? In other words, and what's the opportunity cost? So when I'm thinking about an investment, I'm thinking about, okay, now I don't know when they're going to cut production. I know they have to. I know they need to go to the public markets. I know they need to stop advancing these potential projects. I know they need to stop drilling and exploring because they all have financing needs. And when you've diluted investors to kingdom come, it gets harder and harder to raise capital. So consequently, they're going to have to react. Now, that's fine, but that could go on for a while. So then you have to ask yourself, well, can they produce more? No. Unlikely. Is there any rational reason for them to do that? No. Is it likely they're going to get the capital to keep exploring like crazy so the bears can keep saying, but look at all these projects in the pipeline? No. Can the bears look to these prospective projects and say, yeah, but you know what? The price of uranium is $20 and at 25, they're all going to come back online? No. Where does the price of uranium need to get for any of these projects, with the exception of one a small one that's a little bit lower? But meaningful projects, not little ones, right? Not, there are smaller ones around the world that could come on for less money. And it's the thing, by the way, when you say things publicly, or you put a presentation up, people look at every slide and say, oh yeah, but you didn't put that one. Those are points of references. I'm talking about meaningful projects. Where does it have to get to? $50. Price is in the 20s now. Okay, well, that's pretty good. So the price of a commodity for all the stuff to happen, for new supply to come online, where are these mines that are when these mines close or go on care and maintenance, where are they going to have to get? Where's the price of the commodity going to have to get for them to come back online? $50, $45, $55. Okay, so that means price has to double from here Okay, so what could make a bear case, right? So I'm looking at what could be the bear case in this. Gosh, geez, the nuclear power is dying. Nope, not true. Wind and solar are going to eat its lunch. Yeah, nope, not true. Um, there's way too much inventory around the world. Yep, nope, not true. Right? Yeah, I got to analyze that and go through it all and say, okay, well, so what's the surprise that's going to take these stocks down from here? Yeah, there's always something, right? Another nuclear meltdown, another something. Yeah, right. There's things that are exogenous events, but that you can really get your head around. You're like, geez, okay, so the stocks are kind of muddled here. If you're going to just see more companies go out the business if things don't improve, is there a reason the commodity is there more supply coming online than the market anticipates? No. So the commodity should kind of settle in here. Yeah, probably. So I look at that at the time and I'm saying, okay, well, geez, what are the valuations on these things? Let's look at them. Very few were generating cash flow. So what's the metric that I think is kind of a bullshit metric, but at the time, because I say it's an EV per pound in the ground and a price value per pound of uranium in the ground. Why is it a bullshit metric? Because bullshit companies go out and buy bullshit projects to jack up the amount of pounds in the ground they have. And it's a game they play. But they could have a lot of pounds, but a lot of these projects could be meaningless and uneconomical. But most people don't look at that. But investors will look at, geez, look, it's really cheap because on an EV per pound in the ground is trading it here. And there's other valuation metrics, but when you get comfortable that there's limited downside and you say, okay, well, geez, what if the bears are wrong? And I think they are. What's the upside? And then you look to see, where does the price of uranium have to get? What are all these projects that are in the pipeline? When they come online, to meet demand, they need to come online. Price needs to get here. Okay, what's the cash flow of each individual company? What's the valuation on a prospective basis today when those projects come online? Holy cow, that's cheap, right? And you start doing that math and you start to look and say, okay, so my downside is I don't think there's going to be more supply coming online. The price could drift down a little bit and you get comfort in your head. I don't know, is my downside 30%? And is my upside what? Depending on what companies you're looking at, how you put a portfolio together, but many, many multiples of that. And, so many, many multiples versus a little bit of downside. When I say a multiple, one multiple is right. You get 100%, 200%, 300%, 400%. That's asymmetry. So that gives you, but I don't know when, but I'm willing to wait it out, right, at the time, and I'm thinking about that. And I'm going back to what he's saying here. You need to anticipate, right? You need to anticipate what's going to happen, because if you anticipate and you have a really good risk reward, then who cares? I mean, it doesn't matter. You can wait a little bit. Don't worry about missing out on something to fight and grind for what the market's doing. And that's how I view the world. Why? I'm going to bet on 10, 20, 30% moves and try and grind it out on certain names. Anticipate, study, anticipate, know the industry. God, this is just such a good book. I could be reading the whole book to you here. Gosh, it's great to reread this thing. He really meant to tell them that the big money was not in the individual fluctuations, but in the big movements, the main movements. That is, not in reading the tape, but in sizing up the entire market and its trend. And right here, let me say one thing. After spending many years in Wall Street and after making and losing millions of dollars, this is him speaking. This is talking about Jesse Livermore. And losing millions of dollars, I want to tell you this. It never was my thinking that made the big money for me. It was always my sitting. Got that? My sitting tight. It is no trick at all to be right on the market. You always find lots of early bulls and bull markets and early bears and bear markets. I've known many men who were right at exactly the right time and began buying or selling stocks when prices were at the very level which should show the greatest profit. And their experience invariably matched mine. That is, they made no real money out of it. Men who can Both be right and sit tight are uncommon. I found it one of the hardest things to learn. But if it only after a stock operator has firmly grasped this that he can make big money, it is literally true that millions come easier to a trader after he knows how to trade than hundreds did in the days of his ignorance. The reason is that a man may see straight and clearly and yet become impatient or doubtful when the market takes its time about doing as he figured it must do. That is why so many men in Wall Street who are not at all in the sucker class, not even in the third grade, nevertheless lose money. The market does not beat them. They beat themselves because though they have the brains, they cannot sit tight. Disregarding a big swing and trying to jump in and out was fatal. Nobody can catch all the fluctuations. I'm going to read that again. The market does not beat them. They beat themselves because though they have the brains, they cannot sit tight. You know, I'm on Twitter, footnotes first, and I joined in 2009, but I didn't really start it. I was just observing. I don't think I tweeted until like 2017, and there's a fair amount of reasonable amount of people who follow me, and mostly people want to talk about uranium. And so a wonderful uranium community on Twitter, some really, really smart investors. Really, really impressive group of people who take the time to understand the industry. And then you have newcomers to it who are sensing or they're hearing or their stuff. And over a couple of years now, I've had the experience of having a lot of people come at me because I am rather public on my uranium view. And even those who are bullish, sometimes a few of them have come and said, well, I'm getting frustrated. Why doesn't it work? I don't know. Well, let's see, the commodities moving higher. The prices haven't moved that much. Some of the stocks, some have gone up, some have gone down, but there's been a decoupling from the equities and the commodity. Commodities moved higher, and there's a reason for it. Section 232, which is coming rapidly over the next few months, over the next week, we'll learn something, and then Trump will make a decision. I won't get into the whole details, but it's coming over. 2019 will be an interesting year, and I go back to one of the things that I like about Twitter. I've met some very, very nice people on there. I've enjoyed the conversations back and forth on Twitter and some of the direct messages. Some, but for the most part, some really bright people, but you also get to see, it's a marketplace of people. It's a platform of a lot of people, and you get to see the impatience of some, and I could observe it. I mean, and that's the struggle I have with Twitter is there's so much information that comes to you, but it's not just information. It's great, but there's so many people involved in dialogue, and it just there's so many personalities and so many styles, and a lot of people aren't trained investors and bring their own anxieties to it. And some people tweet incessantly, and right, it just becomes noise. And so, while it's been a nice tool for me to interact with people, and there's some really smart people I learned from on there. I have developed a way for myself just to disconnect from it at times because I don't want to be dragged into their noise. Their noise is their noise. Their insecurities are their insecurities. I have zero interest. So if I get those questions about time and this, and I can tell that they really don't know the industry, that's noise to me. And one of the really fascinating things that I find always interesting is when you're betting against consensus, it takes balls, right? You got to be right, but it takes courage. And there's a fine line between having the courage over your conviction and being stubborn or being intellectually dishonest. You always have to remain intellectually honest. And what I mean by intellectually honest, meaning when you are prone to biases. We all are. I am. Everyone is. So somebody had posted something, and I'm going to look for it now on, oh God, it was Socrates or somebody over the weekend. I read it. I thought I saved it, but I probably didn't on Twitter. And it was a reference to, do you, and just stay with me here for a second, because I'm gonna find it if I can. Something about when do you listen to other people? And somebody was implying to someone that they sure were very convicted in their ideas. Yeah, here it is. Smart people learn from everything and anyone. Normal people from their experiences, and stupid people already have all the answers. Socrates. And it's interesting because when you are making a big bet and you have a really strong conviction on a sector, if you think you have all the answers, that's stupid. If you think you have a really good thesis, but are constantly stress testing that thesis and constantly being open to potentially being wrong, that's really important. Now, it gets tricky, right? Because if you're on Twitter, or if you've really done a deep dive on something and you really know it, and you have people coming at you who are misinformed, quasi-informed, biased, and you tell them that it's interesting, because you really need to have that conviction to know that if it's based on your work and it's based on, let's say, the math never lies. So when you're looking at supply demand industries, it's supply and demand, not anecdotal. So when people come at you with anecdotal arguments or parts of an argument that may not be anecdotal, they may actually be quantified, but it's only part of it. You always hear me say, "What's your model say?" And you can't just stick your head in the model and rely only on it. But it's supply and demand. It's surplus and deficits. Page 60 of Reminiscences. He said the only thing that didn't lie, because it simply couldn't, was mathematics. And then all a man needs to know to make money is to appraise the conditions. Sentiment. That's page 61. I mean, I can't think of anything more than that, right? So, yeah, you've got to have conviction. You got to do the work. Understand human psychology. Understand behavior. But the question that he got was about financial statements. Now, but before I leave there, read Reminiscences of a Stock Operator by Edwin Lefevre, L-E-F-E with a squiggly line, V-R-E. It's a French name, I guess. I will pronounce it wrong. Tell you a funny little story on my enunciations. I was in London a number of years ago, meeting with, I was there all the time for investing, and I was in Europe a lot. And the only improvement I've had in my language skills is I went from speaking with a New York accent to just speaking English with an American accent. That's been my great leap forward. My grandparents who raised me were Italian. They spoke English and part and Italian, and I didn't understand anything. So I'm not great with languages. I wish I was, but it's just not a thing for me. But I even struggle with English. So here I am trying to say Edwin Lefevre. I was in London, and I'm meeting with some CEOs, and I met with one, and the person I was with had something to do, and they were meeting. They said, "You go up to the meeting, and I'll just stay here at this coffee shop. So a meeting with a very distinguished British CEO, very polished, and I'd known him for years. And we were sitting. He said, "Where is so and so?" And I said, was busy, couldn't make it. Went to go have coffee at Pret Manger." And he said, "Where?" I said, "Pret Manger, Pret a Manger." He said, "Mate, what are you talking about? I don't know a Pret a Manger." I said, PRETAMANGER. They're all over the city. He said, "You mean Pret a Manger?" I said, "Oh, that's what you call it." He said, "You call it Pret a Manger?" I said, "Well, yeah, that's how it's spelled." He said, "My God, you're such an ignorant American." And we were laughing. So I hope it's Edwin Lafarve, Reminiscences of a Stock Operator for the Art of Investing. I highly recommend it. I recommended it to my buddy Angus. He's reading it now. Recommend it to you guys. Now, if I were to talk about financial statement analysis, I promise you'd fall asleep. But my God, it's so great. One of the books I'm going to recommend that I really always found really helpful. When I first started in the business, the first firm I was at was using one of the external sources of research that they subscribed to was from an accountant named Howard Schillit, Schilit. And Howard had a business, really smart guy, and Howard would look for accounting anomalies. And they would run screens, look for accounting anomalies, and then they would do write-ups on the companies and sell that research to hedge funds and for shorts. And really, really insightful stuff. And he went on to have really big business. He wound up selling it and took some time off. And now I think he has his business again. And I've known Howard for years. Haven't seen him in a few years, but really, really smart guy. And he wrote a book called Financial Shenanigans: How to Detect Accounting Gimmicks and Fraud in Financial Reports. And I had the luxury of being, our firm received his research, so I got to see it real time. And then when you saw the book written, it was really, really cool. But you don't have to just look for accounting fraud. It lays out a lot of stuff for establishing a foundation and how to look at things that companies do. And again, by looking at things that company do incorrectly, he's teaching you how things can be done correctly, how they should be done. And he talks about the different earnings manipulation shenanigans. Talks about shenanigan number 1, recording revenue too soon. And he gives examples. Shenanigan 2, recording bogus revenue. Shenanigan 3, boosting income using one-time or unsustainable activities. Number 4, and this brings back so many memories reading. I've read this book, and I just had the benefit of knowing Howard and being a client of theirs. And once you get some ideas and you find this in other companies, it's pretty cool. Employing other techniques to hide expenses or losses. Shifting current income to a later period. Shifting future expenses to an earlier period. Right, so these are key things that companies do to manipulate earnings. And again, they may not do it, and then you give it a clean bill of health. But these are things to look for. And in here, he talks about examples, real life examples, where you find these things in the financial statements. There's a reason my Twitter handle is footnotes first, because above the footnotes is where all the fluffy stuff is. In the footnotes is where all the cool stuff is. It's where the cool kids hang out, where you're going to go find the real good stuff. And not a lot of people hang out in the footnotes. Cash flow shenanigans, shifting financing cash flows into the operating section. Shifting normal operating cash flows to the investing section. Inflating operating cash flows using acquisitions or disposals. Boosting operating cash flows using unsustainable activities. Showcasing misleading metrics that overstate performance. distorting balance sheet metrics to avoid showing deterioration. Funny. Remember we were talking about reminiscences of a stock operator saying there's nothing new on Wall Street? In the preface of Howard's book, he starts out with what has been will be again. What has been done will be done again. There is nothing new under the sun. Ecclesiastes 1, verse chapter 9. Ecclesiastes. See, there you go. You have my pronunciation. But this book is what, 300 and something pages. It's been around a while. Financial Shenanigans. I would highly recommend it because it will give you a good guide on how to think about. Now, again, you don't need to be a CPA, right? You just need to know what to look for. Another book that I read and have bookmarks everywhere and highlights, written by Charles Mulford and Comiskey, called The Financial Numbers Game, Detecting Creative Accounting Practices. This is another gem of a book. And a lot of checklists in here too. So if I were a young person or a middle-aged person or an older person, whatever age you are, and you're trying to learn about financial statement analysis, this goes deep into how the game is played. Accounting policy choice, clarifying terminology, fraudulent financial reporting, a real close look into what is earnings management, incentives and conditions for earnings management. I mean, you can't beat this stuff. My God, it's like financial porn. It's so good. My God. Incentives and conditions for earnings management. Geez, incentives drive everything, right? How did the board structure the compensation package for management? Is it based on sales? Is it based on EBITDA? What's it based on? Because that's what these guys are and ladies are gonna go focusing on. And are those bogeys, bullshit bogeys? And how can they get there? So important to know that. Earnings management techniques, evidence of earnings management. Recognizing premature or fictitious revenue. When should revenue be recognized? Detecting it, premature nature of it, and a checklist to detect it. Aggressive capitalization and extended amortization policies. Capitalizing cost, amortizing them, detecting extended amortization periods. You know how often you know how that gets under the radar? You're depreciating or you're amortizing a building. Let's say on a depreciation expense, you were depreciating a building over X number of years. Well, that hits the expense line, right? You capitalize the building and then you take a portion of it as you're depreciating it each year. Does the life of that go from 10 years to 20 years? 10 years to 15, 10 to 30? Did it stay the same? Because if you extended it and there was no rationale for extending it, but you just happen to do it because you came up with some bogus reason, that could help your earnings, right? But I can promise you in a press release, it's not going to say, and the third quarter report was this. No, by the way, just a flag for you. We did extend the depreciation period. It's what they don't say. Getting creative with income statement, classification and disclosure. What are they disclosing? Pro forma measures. Pro forma. Made up. We are excluding this, that, and the other. They'll tell you, and it's the very bottom in the footnotes. Our pro forma numbers, we are excluding this, that, and the other thing. Now, there's certain things that normal companies, they'll give you. So you'll see a lot of acquisitive companies, they'll acquire something. Now, a company might acquire something and they'll write off, they'll back out from normalized, quote, earnings, the expenses to do it, the the integration cost and all this other stuff. And on a pro forma basis, it looks this, because had we not done this, we wouldn't have incurred these expenses. So on an apples to apples basis, X that noise, this is what it is. Well, that's fine. Okay, maybe. But if a company is a serial acquirer and it's a cost of doing business, and the legal and accounting fees are there every year and year again, it's a normal cost of doing business, not a one time. Problems with cash flow reporting. Checklist for using operating cash flow. Remember, cash is king, right? So you can manipulate earnings. It's hard to manipulate cash. It can be done, but it's hard. Another book. So name of the book: The Financial Numbers Game, Detecting Creative Accounting Practices, Charles Mulford and Eugene Comiskey. So to answer that question, Reminiscences of a Stock Operator is going to teach you about the art of investing, and some of it, right? And Financial Shenanigans and the Financial Numbers Game. We'll give you some insights on what to look for when you're reading financial statements. So I hope that was helpful. I'm not going to have a guest this weekend. I thought I got that direct message, and I said, let me do that. If you're interested, you go out and get those books. Yes, I think they're pretty interesting. And I'll endeavor to try and find Howard. I haven't spoken to him, like I said, in a handful of years, but I'll see what he's up to and see if I could get him on here. I don't know Charles Mulford or Eugene Comiskey, but Howard I do, so I'll try and find him and see what he's up to. He's an interesting, smart guy. So anyway, hope you have a good week, and I'll talk to you next week. Thanks.
The information presented on Talking Stocks Over a Beer is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.